Do you feel that funding is a validation? Do you feel that by raising $8 million or $4 million or even $500,000, that it's proving to you that you're not the only crazy person who thinks this is a potential success? Or do you think that founders often mistake investment for third-party traction?
It is actually surprising to me how many entrepreneurs I run into that think they've won the game when they raise capital. All you've done when you raise capital is you've raised the stakes of the game and put a lot more stress back onto your shoulders. And that sounds crazy because a lot of I mentor a lot of startups, and a lot of times and they haven't raised capital, and they think that once they get capital, that life will be easy and it'll be on easy street. When in fact, once you've raised the money, it gets even harder. Now, you have some tools at your disposal you didn't have to execute with before raising the capital. But now, all of a sudden, you have new business partners in your venture. You have very clear, you have a lot of a very clear focus on how much runway you actually have. And
so you start counting the money as it dissipates. So you know how many months out you can last.
Exactly. But there's also a very clear concept which a lot of entrepreneurs don't grasp at the beginning, which is the exit pyramid. And that is, as you raise more money, these investors are going to expect a return on their investment, and your exit value that you create, if you're going for an M&A type of exit, has to be that much higher. So the more money you raise, the bigger the number you have to sell for.
So let's just stop there, because I don't think everyone follows that. So I agree with you. If you raise $1 million, then maybe your investor's okay getting 10 million, 20 million back. If you raise 20 million, then you may have to, just to keep pace, give back 200 to 500 million. The problem is the number of companies that can buy you for 500 million, $1 billion, are very few, as opposed to the 20 million, the 30 million sales, which is why I think a lot of people choose angel money over VC now, because they prefer to have an earlier exit. What do you think?
That's bang on. And in fact, right now I'm starting a brand new venture. It is literally months old, and it is not only lean startup, it's lean financing, because the less you can bring in, the more flexibility you have with the decisions you're going to make in the future regarding potential exits. If you've brought in for example, into Tint, I brought in $13 million of venture capital, and that meant that the exit bar all of a sudden got quite high. And now, fortunately, we hurdled the exit bar, but you
skyrocketed over the exit bar.